As the U.S. economy evolves under the leadership of Donald Trump in 2025, one of the most significant and contentious aspects of his economic policy is the full implementation of tariffs. If these policies are fully rolled out, they will likely have far-reaching consequences, both within the U.S. and globally. From price hikes to shifts in trade relationships, these tariffs will alter the economic landscape in many ways. In this article, we explore the top 10 economic predictions that could emerge if Trump's full tariff policy is enacted. 1. Increased consumer prices. One of the immediate effects of the full implementation of tariffs would be the increase in consumer prices. With tariffs placed on imported goods, particularly from China and other key trade partners, businesses would face higher costs for raw materials, components, and finished products. These increased costs would likely be passed on to consumers in the form of higher prices for everyday goods such as electronics, clothing, and food. The inflationary pressure could be particularly felt in sectors dependent on international supply chains. 2. Supply chain disruptions. Full implementation of tariffs would disrupt established global supply chains. Companies that rely on cheap imported goods or raw materials may struggle to find affordable alternatives within the U.S. or other regions. As companies adjust to the new tariff structure, we could see delays, shortages, and an overall decrease in supply chain efficiency. This could lead to product shortages, longer lead times, and rising logistical costs for businesses across many industries, including manufacturing, retail, and technology. 3. Shift in global trade alliances. As Trump's tariffs alter trade dynamics, countries that are heavily impacted by U.S. tariffs, such as China, Mexico, and the European Union, may seek to form new trade alliances outside of the U.S. These countries may pursue trade deals with each other, creating a shift in the global trade environment. For example, countries that face tariffs on American goods might look to strengthen economic ties with emerging markets, such as those in Africa or Asia, potentially leading to the formation of new trade blocs or partnerships that bypass the U.S. 4. Potential slowdown in U.S. GDP growth. The U.S. economy could experience slower GDP growth if Trump's full tariff policy is enacted. While certain industries, like steel production, might benefit from tariffs, many others could face significant slowdowns due to higher costs, supply chain disruptions, and trade retaliation from other countries. These negative factors could offset the economic benefits of tariffs, resulting in a drag on overall economic growth. Some analysts predict that the U.S. could enter a period of slower economic expansion as businesses and consumers adjust to the new reality. 5. Job losses in trade-dependent industries. Certain sectors that rely heavily on international trade, such as agriculture, manufacturing, and technology, could face job losses as tariffs disrupt global trade flows. Farmers who export products to China or other affected countries may see a decrease in demand for their goods, leading to layoffs and financial hardships. Similarly, manufacturers who depend on imported components for assembly could find themselves forced to cut jobs as production costs rise. While some jobs may be created in industries protected by tariffs, the overall effect could be negative for employment in the trade-dependent sectors. 6. Capital flight and reduced foreign investment. The unpredictability surrounding the U.S. economy under Trump's full tariff policy could lead to capital flight and reduced foreign investment. Investors may be wary of the U.S. economy if trade policies remain volatile, and some could shift their investments to other countries with more stable trade environments. Foreign direct investment, FDI, in the U.S. could also decline as businesses consider the risks of investing in a country with unpredictable tariff policies. This could negatively impact sectors like real estate, technology, and manufacturing. 7. Increase in domestic manufacturing. One potential benefit of Trump's full tariff policy is the encouragement of domestic manufacturing. As tariffs make imported goods more expensive, some businesses may choose to bring their manufacturing operations back to the U.S. to avoid paying high import duties. This could lead to the growth of U.S.-based industries, particularly in sectors like steel, textiles, and automotive manufacturing. However, this growth may be tempered by higher labor costs and less competitive production efficiency compared to overseas alternatives. 8. Higher debt levels due to trade wars. As global trade tensions escalate, governments, including the U.S., may be forced to increase spending to support industries and workers affected by the tariffs. This could result in higher public debt levels as the government takes on more financial commitments to buffer against the economic fallout of trade wars. Increased debt could have long-term implications for U.S. fiscal policy and may require higher taxes or spending cuts in the future to maintain fiscal responsibility. 9. Rise in protectionism globally. If Trump's full tariff policy is enacted, other countries may follow suit and implement their own protectionist measures. The risk of a global trade war could increase, with nations seeking to protect their own industries from the impact of U.S. tariffs. Countries could retaliate with tariffs on U.S. goods, further exacerbating the trade tensions and stifling global trade growth. This protectionist shift could also lead to the fragmentation of the global economy, with countries focusing more on their domestic markets and less on international cooperation. 10. Increased economic inequality. The impact of Trump's full tariff policy could lead to increased economic inequality. While some sectors and industries may benefit from tariffs, others, especially low-income consumers and businesses, could suffer the most. Consumers may find that the prices of everyday goods rise, disproportionately affecting lower-income households. Similarly, small businesses that rely on affordable imports could struggle to maintain profitability, while large corporations with more resources may be better able to absorb the higher costs. This could lead to a widening wealth gap and social unrest as certain segments of society feel the adverse effects of trade protectionism. The full implementation of Trump's tariff policy in 2025 will likely have profound and lasting effects on both the U.S. and the global economy. While there may be some benefits in terms of bolstering domestic manufacturing and protecting certain industries, the challenges posed by rising consumer prices, job losses, supply chain disruptions, and retaliatory tariffs could outweigh these positives. Small businesses, in particular, may find it difficult to adapt to the rapidly changing landscape, while global trade may become more fragmented. For investors, companies, and policymakers, understanding these potential outcomes and preparing for the uncertainty ahead will be critical to navigating the economic turbulence of the Trump-era trade policies.